Well, one of the things that we talk about at Golden Reserve is handing out pay cuts. A lot of retirees take pay cuts over their life, over retirement, and I think it's their chance now to figure out who should we give a pay cut to. And a lot of times it's the financial advisor, but today we're going after someone else. You ready?
Yeah, absolutely.
Let's give it to this guy. Break it down for us, Phil. Why should we give Uncle Sam a pay cut?
Our favorite uncle, right? And he came out with these new rules in 2020, and it was built with this nice shiny wrapper to defer, needing to pay taxes on our IRAs. A disingenuous plan that showed his patience is going to pay off in more dollars for him.
Well, break down what that means. So you're saying, obviously, this was touted as a win for retirees, going from, obviously 71 to 73, and then it's going to go to what, 74, 75 here in the upcoming years. And this was like, hey, I got to wait longer to pay taxes. Why isn't this really a win for retirees?
Yeah, that's how it was wrapped as this great thing, but it might have been one of the worst tax changes in history.
Wow.
And the reality is, it sets everybody up to fall asleep at the wheel. Just leave the money in the IRA, don't touch it until you have to take those RMDs. And then even then, everyone says it. Uncle Sam wants you to, advisors say just take that required amount. But the issue is going to be the two penalties you run into, the widows and the kiddos penalty.
Well, break those down. No one hears. I think a lot of people are like, what's the widows and kiddos penalty? I've never heard of these tax problems.
Right.
I guess, help us out, understand what those can do to your retirement.
Yeah, they're not widely talked about. The widows penalty, this is when the first spouse passes away. See, that surviving spouse no longer pays at the low joint tax rate, but has to jump up to single rates, oftentimes paying twice as much. And for the kiddos, when they inherit this money, new rule, they can't stretch it over their lifetime. They've got to pay taxes over just 10 years. They could pay twice or even 3 times as much.
At their tax rates. That's the rub. I think most people think their kids inherit their IRA tax-free, or maybe at least at their rates, but they have to pay at their kids' tax rates, which could be their highest earning years.
Yep, in their 40s and 50s.
So this is kind of overwhelming. Can you break down an example for me?
Yeah, so let's talk about someone that has a $557,000 IRA. Imagine that they waited until 73 and just took what was required of them. Well, with the widow's penalty, when the first spouse passes, they're going to pay $20,000 more in taxes. When the surviving spouse passes, money goes on to kiddos, that's additional $133,000 in taxes.
So they're getting combined possibly $150,000 more on just $557,000. That's not the total taxes. That's the additional taxes they'd be paying using Uncle Sam's plan versus their own plan. So I think most of us want to know, what would a plan for a retiree look like not using Uncle Sam's plan?
Well, the first thing is we can't just wait till 73. Instead, when we retire and our tax rates go down because our income goes down, we need to start doing our draws. This is where our CPA team figures out what is this number of how much to take out over 10 years, resulting in a 7.6 effective tax rate. The idea is this bottom number. This is what it's all about. Reducing the total taxes paid by over $130,000. That's a big impact.
So waiting until 73, you lose that $133,000. Starting your plan at 60 and using a tax map that Golden Reserve puts together could save you up to or even more, around $133,000 on a $500,000 IRA.
Right. Don't use Uncle Sam's plan. Create your own.
If you want to give Uncle Sam a pay cut, start with getting a tax map to break down when and how much to take out of your IRA each year to maximize your tax savings. Get a plan for you. Don't use Uncle Sam's tax plan for your family. That is why the tax map is part of every complimentary roadmap for retirement that we build. So in addition to the tax savings, our roadmap also includes a breakdown of the fees you're paying your advisor, market risk, and long-term planning legal strategies. You deserve to keep the most amount of your life savings in your bank account, not Uncle Sam's.